Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time. And this week's topic, guys, we're going to talk about gambling. Yep, we're going to talk about blackjack. Talk about craps. Yep, it's blackjack. You guys like blackjack? Well, that's what we're going to be talking about today. No, I'm kidding. We will be talking about blackjack. We will be talking about craps. We will be talking about edges in trading, right? Understanding what your edge is in trading. To be honest, do you even have an edge in trading? Are you process oriented? Are you outcome oriented? All right. Do you have a trading plan? Do you have a tracking spreadsheet? Are you just a random person who throws crap at the wall and you hope it works? That is not going to get it done. So today we're going to dig deep into that. Are you a gambler? Are you actually a trader? And we're going to take a look at some trades that people have suggested to me that I take. And we're going to go through them and see if they're good trades or not. Because let's be honest, if you don't have a plan and if you're not watching or following the charts, what are you doing? You're probably gambling. So hopefully this lecture will keep you from being a gambler. As always, guys, if you like these videos, please click that like button, hammer that subscribe button. I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is, it's just a game of odds. This lecture was inspired by some commentary and some trades that were taken last week in the Live Traders chat room. And I thought, you know what, this would be a very good time to talk about what type of a trader you are, as well as do you really believe in the business? Do you really believe that this is a game of odds? I mean, what is it that you believe about trading, basically, is what we're going to talk about. We're going to look at some text slides to begin and then chart slides to end. So it's kind of 50-50. Slide-wise, there's actually quite a few slides in this. Hopefully we'll get through it in a manageable, reasonable amount of time. But I really mean, this is a powerful, important lecture because for some of you, it's going to dig deep into your core in terms of what do you really think about trading? And you're going, well, duh, Jared, and I know it's not a gambler's paradise. I mean, this is a serious business. Is it? Is it a serious business? And the question is, if it is, then why don't you treat it seriously? And I'm not just talking about the business side of trading. That's not what we're going to focus on today. We're going to talk about the actual trades that you take. Are you just throwing shit at the wall and going, okay, well, it's 50-50. Is it? Is throwing slop at the wall really 50-50? Do we really have 50-50 odds? If you take something, is there really a 50-50 odds that it's going to go higher or lower? Really? Just because they're the only two choices, does it make it 50-50? So we're going to talk about that as well, because I think some of you guys, you just kind of throw random stuff out there and you just go, oh, well, you know, sure, it should work, right? So I personally think it's a powerful topic, and I hope you guys find it to be the same. But before we do any of that, we must first talk about when will the insanity stop? When will the insanity stop? When will it stop? Nobody knows. People do crazy things in this world, and the last few weeks that we've talked about when will the insanity stop, they're actually not insanely egregious, but the concept of what people are doing is very egregious, if that makes sense. So it's not necessarily because they've lost millions of dollars. They might only be losing $5,000 or $10,000. But what they're doing is going to lead them down a path of being poor, broke, and being frustrated most of the time. So this week's When Will the Insanity Stop is trading depression. How do you deal with it? Well, the first way you deal with trading depression is have a plan. That's it. We're done now. We can move on. Right? Have a plan. Okay? I started swing trading, and note the person said trading, okay, swing trading stocks in April of 2020, and recently took up day trading in November of 2021. I currently have a $20,000 account, which is down $13,000 as a result of swing trade losses, which is $3,000, and my stupid mistake of lending money to my brother to trade options, $10,000. So really, you don't have $20,000. You have $10,000 because you lent your brother 10, and you may never see that money again. Okay. So realistically speaking, this person has lost 30%, right? They gave 10 to their brother and they've lost 3. So how in the world did you lose 30% of your account? Guys, the rule around here, around live traders, and a lot of people I'm starting to see are copying it all over the internet because they don't want to be considered charlatans, is money management matters. Money management matters, okay? In fact, we should make t-shirts for that, all right? MMM, money management matters. $5 risk, $10 risk. This person has admitted they started swing trading in April of 2020. My guess is they got some advice from family or friends or whomever and said, hey, I need to get into the market. Oh my gosh, COVID happened and the market shot up. Okay, fine. But you lost $3,000 in a market that went straight up over the last 2.5 years. How's that possible? One, you don't know what you're doing. Two, you don't have a plan. And three, you're risking too much money, okay? So I've been going through a cycle of finding a strategy, being excited about the strategy's potential returns, only to be disappointed about an obstacle preventing me from actually trading said system. For example, I'm currently backtesting and paper trading a strategy that seems promising. This strategy requires a good broker for shorting, so I'm looking to open an account with Cobra Trading. Really, that's a good broker for shorting? I would say Interactive Brokers is the best in the business for shorting stocks. I don't even use Interactive Brokers. I used to use them. I use them for options and credit spreads. But in terms of short availability, I don't think there's anything better than IB. They require, however, its clients have a minimum of 30,000 open account. So I'm short 10,000. Yeah, no, you're short 20 because you lent your brother 10. Let's be realistic here. Plus the 3 you lost, you're actually short 23. Okay. Plus, I'm not even sure my short orders will get filled due to a lack of intraday liquidity on the stocks I trade. Guys, read that with me. Read that again. I'm not even sure if my orders will get filled due to a lack of liquidity, intraday liquidity, of the stocks I trade. Well, why are you trading stocks that are so illiquid? What is wrong with you? I don't have a plan, that's why. Oh, it's a $2 one-trick pony penny stock, and I'm going to get rich quick on it. No, you're going to get poor quick on it. So my point, though, is, and I drug this out a little bit, which I typically do, have a plan, for goodness sakes. You're just throwing crap at the wall and you're hoping it works, and you don't even know what you're doing. I mean, you don't have a platform that allows you to short. You're trading stocks that are too illiquid to get filled on. You're risking too much money. Clearly, you lost $3,000, and you should have lost maybe 300. Guys, this is a business. Treat it like that. This is the problem with traders. You don't have a boss. I know you all hate your bosses, and that's why you want to be a trader, but here's the problem. You don't realize you need a boss. You need something or someone to hold you accountable. And if you don't have it, you usually take advantage of yourself. You're not taking advantage of others, you're taking advantage of yourself. So while you may hate having a boss, comments like this prove most people need a boss. So if you don't want to have a boss, figure your crap out. Meaning, be accountable, be objective. And until you are, you'll never be a great trader, and you'll always have a boss because you'll never be able to trade for a living. Okay? So, let's dig into this. All right? Interesting topic, in my opinion. Gambler versus card counter. Ooh. What are the odds at a blackjack table or a craps table? Say you go to Vegas or Atlantic City or Macau or wherever you decide to go. What are your odds? I bet you most people don't know what the odds are. Sure, of course there are some people that know what the odds are, but you know what they do? They go in there and they sit down at a table and they plunk down $100, $500, $1,000. Hey, dealer, give me a stack of chips. Here's $1,000, give me a stack. They know basics about blackjack. Hey, I'm going to hold on a 17. All right, I'll hit anything under that. That's it. Right? That's it. And I would venture to guess, and I don't know the exact number. I genuinely don't know. But I would venture to guess 75% of the people that walk into a casino door and sit down at a blackjack table really don't know what they're doing, for the most part. Right? I mean, I think that's a fair number. I don't know the number, but I'm saying that's fair. Why am I bringing up this number? Because I'm going to venture to guess, okay, that there's probably about 75% of people that open a trading account, that have a trading account, that call themselves a trader and have no idea what it is they're doing with trading. So there's some parallels here, okay? The vast majority of people doing both of these activities, blackjack and trading, don't know what they're doing. But yet they're going in with an expectation. that they have no business expecting. Sure, some of those people have an expectation to just have some fun. Hey, I'm just going to go have some fun. I brought $1,000 to Vegas. If I lose it, I don't care. But a lot of other people don't. They have some expectation. Okay? The goal of a trader is to put the odds in our favor as often and to the most extent possible. Eliminate randomness, gambling as much as possible, right? Eliminate randomness and gambling as much as possible. Okay? So again, I'm going to repeat that one sentence. The goal of a trader is to put the odds in our favor as often and to the largest extent possible. We want the biggest odds we can get, and we want to put those odds in our favor as much as we possibly can. And if we can't, we probably don't want to trade. The problem is, if you don't have a plan, all you have is randomness. Think about what I just said. If you don't have a specific plan, meaning an exact approach to your trading or to the markets every single day, then everything you do is random. It's randomness. Everything you do is random. Okay? Think about that for a second. Are you a random trader? Do you just have, quote, a gut feeling or a hunch, and that's what you use to trade? Now, again, if you're 10 years into this and you have results, that's different. If you're new, you have not earned the right to be random. You have not earned the right to have, quote, a hunch or to be subjective. You haven't earned those things. We do this over hundreds, if not thousands of trades, not 5 or 10. So when we talk about odds, whether it's blackjack or craps or trading, the odds are over a lengthy period of time. Anything can happen over a short period of time. Okay? We do this over thousands of trades. My job isn't to teach you how to get lucky. It's to teach you how to win consistently over time. And how do we do this? We use technical charts to do this. I'm going to repeat that. My job is not to teach you how to get lucky once in a while. It's how to teach you to be consistently profitable over time. And if you're not going to listen to that, then just go to Vegas, because that's what your odds are. All right? We need an edge. And to have that edge, we need to be consistent, eliminate randomness, and have some form of system which makes us or helps us be consistent. Okay? So you can construe that as sour grapes or being mean, but there's a method to the madness. Okay? Why would I put a statement like that's kind of a random statement, isn't it? You can construe that as sour grapes or being mean. Why would I throw that in there? That's a weird thing to say. Because that's what somebody said I was doing last week. That I was just being mean. I'm sour grapes. It'll make more sense as we go a few slides later and you'll see the trade we're talking about. There are more of them. Okay? Bad trade? Reply I got. But I got 2R from it. Tell me you guys haven't done that or said that to me before. You have. I'll call you out for taking a trade that you probably had no business taking. Ego kicks in and you go, yeah, but it worked. Yeah, but I got 2R. How's your day going, Jared? You guys especially like to do that if I'm having a bad day and you're having a good day and I call you out on a bad trade. You especially like to do that. But I'm talking in front of the camera, not you. You go where I'm going with that. I don't have to say any more than that. My job is to hold you accountable, especially when you ask me about it. If you don't ask me about it, I won't know you did it. But if you ask me about it or make a comment about it, I'm going to know that you did what you did and I'm going to hold you accountable to it. So don't be unhappy with me for telling you the truth. Sometimes the truth hurts. Sometimes we win the wrong way. We all do it. I am guilty myself. Okay? We don't care, again, what happens over 5 or 10 hands. We care what happens over hundreds. Why am I repeating that? Because if you repeatedly take that specific trade 100 times, you're going to lose 80 of them, 75 of them. Sure, you're going to win some of them. Everybody wins sometimes. But if you continue to do that thing, over the long run, you won't be here anymore. That's what I want you to internalize. Forget about your ego today. Think about your pride over a year or two when you have to put your head down and go back to your boss and say, and he's like, oh, it's good to see you back, Johnny. Why are you here? Because I couldn't make trading work. It's just for gamblers. No, what you should be telling your boss is, I am a gambler, and that's why I'm back to see you, because I need somebody to hold me accountable because I'm clearly not capable of doing it myself. Winning the wrong way is a path to failure. That's it. You have to trade within those expectations. That's it. That's it. Good trade, bad trade, objectively look at it. I don't care what the result was. Forget about the result. Push the result aside. Look at the trade for what it really is, good or bad, because they're all good or bad. All right? So, if your expectation, and you saw this one last week, doesn't match the chart or the trade, you will likely fail or stop out. Right? Are you gambling or are you trading? What are you doing? Okay? So now let's dig a little deeper into this topic. Okay? We'll move it back towards the blackjack table. All of this relates to trading. Okay? Expected value, also referred to as EV. All right? You can go to betandbeat.com. This is where I got this information from. So anyway, expected value is a concept in not just blackjack, but in most casino games and also sports betting. Expected value is best described as the value right now of something which helps in making a particular decision. So for instance, I'm not going to read this whole thing. A player places a $1,000 bet on the blackjack table, and he gets 2 cards, making a total of 20, with the dealer holding a 6 as his up card, if you've ever played blackjack, okay? Of course, the player's in a good position, right? They got a 20, the dealer's showing a 6. I mean, the game is 21, you're pretty damn close. The odds of the dealer getting a 21 are not great. So you're in a good position, okay? So you decide to stand. What would be the expected value of this person's blackjack hand right now? It would have to be less than 1,000, right? Because 1,000 means a guaranteed victory. You guys following me here? Or are you losing me? Can't be $1,000 because that would mean you got blackjack, right? So there's 3 possibilities here. The dealer could draw a 21 and the player would lose. That's one possibility. Note that's in red for a loss. The dealer could draw out to a 20 and the player gets a push or a standoff and, well, you don't lose, but you don't win either. Okay? The dealer get a 19, the player wins. Why did I bring this up? Because this is trading. There are days where you can win money as a trader. There are days where you can break even as a trader. And there are days where you can lose money as a trader. In most businesses, that third option of losing is generally not there. Right now, you could argue you lose money if you don't make a sale because you have electric to pay and insurance to pay and blah, 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 blah. I get that. But actually taking money out of your account, that's what trading is when you lose. Okay? So when you look at this, the odds are pretty good. The expected value here is 70.4%. Again, you guys can kind of read all this on your own. I'll be here all day because I have another 15 slides to get through. Okay? So the expected value of this is very good. $700 every time you get a 20 against a dealer 6. Now, a professional blackjack player would know what the expected value of this is. Kind of like poker players. You ever see like Daniel Negreanu and they sit there and it's like, hey, they see what's on the table and they know what they have and they know the odds. Where am I going with all this? What are you doing, Jared? Are we talking about blackjack today? What are we doing? No. You need to know as a trader. You like the 84% play? I know it's 84% because of my back testing. And you know what? That's variable as well, because unless you back test it as a rolling back test every day for every trade you take, that expected value changes. Right? It changes maybe from an 87 to a 72. Okay? So the point, though, is that you need to understand these things. Right? The importance of calculating expected value in this manner helps blackjack players in taking the right playing decision with any hand in any situation. Now, why? Why, guys? Tell me this. You have to help me out here. I need to know you're paying attention. Why would a blackjack player or a trader or anyone, why would you want to know the expected value? Why would you want to play the right hand in any situation? What's the overall goal? Knowing you statistically played the right hand in every situation. Why would you want to do that? If you know statistically this is the right play, why would you want to know that that's the right play? Ultimately, it's what Michael's saying. So you need to assess your odds, which is what Scott is saying, but Michael's saying that's your edge. So now you have an expectation. It's like, well, I did my job. Right? So when we think about this as it relates to trading, your pre-trade checklist is basically you making the right decision with any trade or stock given to you. Right? For a blackjack player, it's like it's knowing what the expected value is, lets me know if I need to hit, if I need to split, if I need to stand, whatever. As a trader, it's like this is my pre-trade checklist. I know if I go through this, and I'm very specific and thorough when I go through it, I have done my job. After that, I don't know what card the dealer's going to flip. Right? I don't know. They have a 6. They're showing a 6. Well, maybe they get a 7 and an 8. And all of a sudden they get 21. Oh, well, I did my job. Do you understand where I'm going with this as a trader? Once you have taken the position and assuming you have thoroughly gone through your checklist, you have done your job. After that, it's a whoa. Not up to me anymore. It's not up to the blackjack player anymore once they followed the proper path for their expected value. Hey, I got a 20. I'm standing. Oh, well, if the dealer beats you, the dealer beats you. More often than not, though, in that scenario, you are going to win. Most of the time. But not all of the time. Okay? Guys, there's a method to this, trust me, because I'm getting down to some charts in about 3 or 4 slides, and we're going to look at some charts, and it's going to all come back to this. The house edge and expected value in blackjack are related concepts. The house edge is basically the expected value in relation to the bet amount. So, the expected value is $1,000, and the bet is $95, then the house edge is 5%. Right? So the point, though, is this is over a considerable number of trials. It's not over one hand. It's not over one trade. It's not over 10 hands. It's not over 10 trades. We're talking hundreds to thousands. The longer you do this, the more the odds play out in your favor if you're a good trader and against you if you're a poor trader. Okay? So this is the one I want you guys to pay most attention to. It's in pink. It's right in the middle. It says, if the player is able to make the right move each time with the highest possible expected value, the house edge falls to between 0.5 and 1%. That is basically the best edge you're going to get. Now, we can talk about card counting here in a moment. But you're basically doing what? By playing properly in blackjack, by knowing the expected value, by knowing the percentages, by knowing when to stand, knowing when to hit, you are decreasing the house edge. The house has a natural edge against you. The market has a natural edge against us. Does that make sense? It does. The market has a natural edge against especially new traders. And Ollie, you are very right. There is no variation on that specific table, right? You can go to a different table or a different casino that has different rules, but on the table in which you're playing, everything is static. The dealer has to do this when they hit a certain point. You have your rules, meaning everything's static. You're absolutely right. It's like playing blackjack in a vacuum. We don't trade in vacuums. Why? You can do everything right, and a random news report comes out, and all of a sudden you're like, well, that was unexpected. Because maybe it was random. Now, if it was a 1030 oil report, well, then you didn't do your homework. That's part of the game. That's part of the known game. With trading, there's an unknown part of the game. Oh my gosh, Tim Cook got hit by a car yesterday and Apple tanks, or it happens right in the middle of your trade. How could you have known? You couldn't have. But those also are somewhat on the rarer side. So we can, to some extent or a large extent, have a certain level of expectancy. Okay? The point here, guys, is when you look at blackjack or craps or whatever game you want to pick, but we're using blackjack, the goal of a professional is to eliminate, to as much extent as is possible, the house edge. Our job as traders is to eliminate the market edge to whatever extent is possible. We want to increase our edge as much as possible. It's like that when I say minimize your weaknesses, maximize your strengths. This is what we're trying to do as traders. And when you do this, the odds of your success greatly increase. When you're random, you cannot duplicate that. So this is why new traders will often have really good months and really bad months back to back, up and down, all over, sideways, because they're so random with their approach. They don't understand that it was just luck when they won, and it's also luck when they lose, because there's just randomness. They don't have an actual approach. So in blackjack, the casino's house edge is roughly 0.5% if you use the, quote, basic strategy, or 2% if you do not follow the optimum strategy at every hand. So basically, if you go in there and you don't follow the optimum strategy, the house has a 2% edge on you. If you go in there with a strategy, in this case called basic strategy, it goes down to 0.5%. If you can count cards, you might get it down to 0 or 0.2%. And that's pretty even. That's pretty good odds, right? Your goal in trading is to find out what you need to do over the course of 100 or 200 or 300 trades to beat the market. Okay? I'm talking about this topic today because I'm seeing traders just do stupid stuff. Just really, really stupid stuff. And they're not in the position to be doing those things. And occasionally, they're getting away with it. And when they get away with it, they feel justified in doing it, and they'll do it again. And then it won't work the next time. So your job is to put down a list of rules and expectations. Things that you have to do, not you're supposed to do, things you must do. And then you're going to track that. You know, we always talk about that planning circle of success, right? The back side of that circle, right? The assessment of it, making adjustments of it, that's the important part. Because if you can't make an assessment of what you're doing and then make proper adjustments, it's going to be hard to be better. And one of the things you have to do to be able to do that is be consistent. All right? So, note, and I understand it's a static game, but if you look at this slide, and I'm not going to go over it, but look at how the odds change. Now, these are all based on single deck games, but removal of card 2 leads to a minus 0.4 house edge. All right? Removal of card 5 leads to a minus 0.67 house edge. Removal of card 9 leads to a 0.15 house edge. My point is, all these are known things. So at least know all of this if you're going to be a professional blackjack player. If there is such a thing, I don't know. But know the edge. Know what you're good at. Know what you're not good at. Know that Tuesday is your worst day of the week. And if you look over the past 6 months, you have net lost money on Tuesdays. Well, it's nice to know, isn't it? Because now you can either not trade Tuesdays or maybe trade half lot Tuesdays or figure out some other answer to that question. Right? So, this brings us to this. What is your edge in trading? Do you even have an edge in trading? Now note, a lot of this goes back to our When Will the Insanity Stop segment, doesn't it? That particular person has no plan. They have no approach. And they're upset and depressed that they're losing money. Well, how can you be upset? You have no expectancy because you don't have an approach. It's completely and totally random. There's no way, other than luck, there is no future in that. There's none. You may get lucky for a while, but it's going to catch up to you. And this is the problem with so many traders. They don't even recognize what they're doing is luck and just pure randomness. So if you can't recognize that, how do you ever expect to be a great trader? Well, the answer is you probably shouldn't expect to be a great trader if you're just going to do something different every day. There's a reason we look at technical charts. There's a reason we look at bottoming tails. There's a reason we look at volume spikes. There's a reason we look at support and resistance. There's a reason we check news reports. There's a reason that certain gaps have more shock value than others. There's a reason for this. Those things help give you an edge. But if you're just going to randomly apply them, there's no point. Don't even start. Just find something else. Wait, stay at your day job. Okay? Chart tells you everything you need to know. Everything you need to know. Okay? The expectation matters when taking a trade. You guys saw this slide. I think a week or two ago, I put this same slide up. What's your void? What's your confirmation? Do you have multiple time frames in alignment? What are the market conditions? Does the stock have relative strength or relative weakness? Is the market down 4% today, nearing support? Extended into support equals a bounce. What's going on? What do you see? What is the chart telling you? Okay? You have to trade within those expectations. And then not only what you see, but what your plan allows you to do. So if your expectations don't match the chart or the trade, you're going to fail or stop out. Your management has to match your expectations. Your personality has to match your expectations. Your timeline. So see, we have two problems here as traders. We have what the chart is telling us, and then we also have our own inner demons. You see, what the chart is telling us is one thing: the bottoming tail, the support, the void, the strength, the weakness, the market. Then we have to deal with our own demons inside of that. You might see something but not be able to act on it because you're scared or paralyzed, or you're just like, oh my gosh. And some of that could be personality, some of it could be you're risking too much money, whatever. So we have two problems here: the expectation on the chart and then your personality as well. But that's for a different day, different discussion. I want to take a look at some trades. The next, I don't know, 7 charts or slides. Okay? So, pretty straightforward. Is this a high odds trade? Well, what are we looking at here? We're looking at MU on a 15-minute chart and a daily chart. And we're looking at the Qs down on the left on a 5-minute chart. So I always, because it's just what I do, and I think every good trader does the same thing, I always look at the daily chart or the 60-minute chart first. There's never a time I take a trade where I don't look at the daily or the 60-minute chart first. So if I'm looking at the daily and the 60 on the right-hand side, I see a pink line at roughly $55, 55.25, something like this. This pink line represents resistance, okay? I also see this blue line going down. And this blue line going down, which is clearly marked, is a 50-period declining moving average, right? It's a declining 50-period moving average. And that's at 55.08. So I see a whole cluster of crap at 55 to 55.50. Red bars, topping tail bars, pivot bars, declining 50-period moving average. So my first thought here is not much to work with. Not much to work with. I just don't have a lot of room on MU to play with here. So let's go from the daily to the 15-minute. And what do we have? Well, we have a stock that gapped down very slightly, not very much. It gapped down just a little bit, okay? And then it moved all the way up to $55. And it got there from 53.50 to 55 on 3 consecutive 15-minute green bars up. 2 of which were wide range. 1 was very wide range, right? The very first bar of the day was very, very wide range, okay? So we're 3 15-minute bars up, and I see a pivot here, a gap failure here, and a double top over here on the left. And if I go down to the 5-minute chart of the Qs, I see 1, 2, 3, 4, 5, 6 bars up on the Qs, nearing resistance. See the pivot there on the 5 right there, like 270.75, 271. I see a pivot, and I see 1, 2, 3, 4, 5, 6 bars up. So I have a stock that's in daily congestion at the 50-period moving average. I have a stock that's up 3 bars on the 15-minute, and I have a market that's up 6 bars on the 5 at pivot resistance. Everyone tell me. Good, high odds trade. Yes or no? Mostly I'm getting no's here. I don't see any yeses. Most likely we'll pull back, no entry. Okay? I thought the same thing. I was just reading the chart with no skin in the game. I don't care what anyone else does. It's their money. I'm trying to just help you read the chart more properly. I was told that this is sour grapes and I'm just mean. I was told that I'm just mean. I'm sour grapes. That's why I used that phrase earlier. Okay? Then when Unwall came on, somebody was like, oh, finally somebody nice is on the mic. Huh. Sour grapes. Why? Because my thought was not in alignment with someone else's opinion. MU, $6.49, $9.49, over $55. Next comment, a minute later, gonna take it. Now, I'm showing you this because this is what the chart looked like on a 3-minute and a 5-minute. We already saw the 60 and the 15. Sorry, the daily and the 15. We already saw the daily and the 15. You guys looked at that. So now we're going to drill down like a good trader would, although I would never get to this point because once the daily looks like crap, I just don't take it. Okay? And you're here at $55. 1, 2, 3, 4, 5 bars up. Right? 5 bars up. Here on the 3-minute, maybe a resting bar or two. Also, the question then becomes, where is the stop loss area? Like, I'm just looking at this. I don't know the future. This is why this is all blurred out, right? That's why it's all blurred out. I don't know what the future is. Okay? I'm just saying this person wants to take this over $55. This is the same timestamp. This person wants to trade it. You can see the timeline. I don't know where I'm even going to put the stop loss on it. I don't like the daily. The markets are also up 6 bars in a row into resistance. And again, I don't know where I'm going to put my stop loss. And I need an entry stop and a target. And I'm also at the 50-period moving average. But what happens? What happens? 20 minutes later, almost exactly, MU 2R. Right? MU 2R. Market's up 1, 2, 3, 4, 5, 6 bars in a row. Okay. And then it goes up 1 more bar, pulls back, puts in a lower high and a lower low, and then shoots back up. What does MU do? Kind of triggers right in that range, goes up a little bit, like, I don't know, 50 cents, something like that. Okay. Pulls back, bounces a little, pulls back even more, and then goes on and apparently hits 2R. I mean, if your entry is 55 and you have 2R by 1020, that has to be like right in here is my guess. So they must have used a very tight stop loss, right? Obviously, to get 2R, maybe 25 cents perhaps. So I look at this and I sit there and it's not for me. And I'm telling you, if I take this trade 100 times, 75 of them probably aren't going to work. Maybe 25 work. But that's not good enough. Right? That's not good enough. That's it, Scott. But here's the thing. People do this all the time. Every single day in the chat room this happens. Now, I don't mean every day I tell somebody don't take it. I'm not saying that. But every day in the chat room, somebody takes a trade that is up 5 bars in a row that they probably shouldn't take because it's either extended or into resistance or it's above its average trading range or whatever. Every day this happens. And you just have to ask yourself, why? Right? Why? We go back to the analogy I started with. Our job is to be as consistent as possible with our trading plan so that we can put the odds to as much of an extent as possible in our favor. MU will work sometimes, and a really good trade will fail sometimes. This is just part of being a trader. Okay? That's just part of the business. You take a look at this, and really, the stock, yes, it was somewhat stronger than the market, But really, ultimately, it ended up being very similar to the market, right? Market pulled back, put in two lower lows, and this stock pulled back, put in lower highs and lower lows. Market bounced, the stock bounced. It ended up being highly correlated to the market, while off the open, it was quite similar, if not maybe slightly stronger. But I should never even be down here on the 3-minute because I should have never, ever, ever gotten past $55 on the daily. It should have never gotten past this. I shouldn't even had to look at the 15-minute. I'm at an area of congestion. I'm at the 50-period moving average. And if you want to get extra confirmation, great. Look at the 15-minute. Look at the market up 5 bars. Should have never needed to do that. The daily in this case was probably enough to get you to move on. Okay? So let's move on. All right, now, what about this one? What do we have here? What do we have here? Good idea? You decide. On the left-hand side, sorry, on the right, my apologies. On the right-hand side, I have a stock that's 3rd day down. 1, 2, 3 days down. It's nearing the 135 area, which is the pink area. See the pink line? Okay. 3 days down, at daily support. 145% of its ADR needs $3 more for a 2-hour target. American Express short. AXP already 145% of an ATR. That was a room member who said that. Yeah, I think it can reach 130. Well, I think a lot of things too. And just depends if what I'm thinking is reasonable. We all have thoughts. Are they reasonable thoughts? Okay? So you look at this and you say to yourself, well, how many times in the last, I don't know, whatever this is, 1, 2, 3, 4, 5 months, has American Express exceeded this amount of range? I see one time, and that was like 5 days prior. Right, when I look at this bar, compared to this bar and this bar and this bar, that's about all this thing puts in. Okay? It's about all the stock puts in. And then when I look at it, I see another pivot here at 135 and another bottoming tail at 135 and another bottoming tail at 135. And I think to myself, while, and this is the case with everything, while anything is possible, the odds of this going $3 more are pretty slim. Possible, but slim. Okay? It's like the golfer who's 247 yards out and they want to get to the par 5 and 2. And they pull the big dog out off the carpet. They're like, yeah, I hit my driver off the fairway like, twice a year. I don't ever practice it at the driving range off the carpet. But today, yeah, I think I can reach the green. Tell me I'm wrong with that analogy for those of you who play golf. I don't hit my 3-iron very well. That shot's 215. But if I just nut this thing, tin cup, I can get there. And maybe you're right. You can get there. If everything lines up, the stars line up, all the traffic lights turn green, the wind is perfect, tip your cap to the gods, pray, get some holy water out there, and you are right. I'll give you 20 shots, and you might make 1. But you're going to try it. You're going to try it. I'm not after the 5% or 10% or 20%. I'm after the 75%. I'll lay up, thank you. I'll take the 7-iron, which I hit well every time, and I'll lay up and I'll have a 50 to 70 yard chip in. But you do you. I'll take the guaranteed par versus the 1 out of 20 birdie. This is trading, guys. People don't care, though. And then they wonder why they are where they are. Why they haven't progressed past where they want to be yet. Because those types of things, they do work. Just not often enough to make you a great trader. So, take a look at this slide. Same stock. What happens? You get in at 135. Stop loss is just above 136. I think so anyway. It dropped $2.29 on what looks to be a $1.50 stop loss. And then what happened? It's American Express. It left one of the biggest bottoming tails we've seen in quite some time. Can't imagine why. Just can't imagine why it would leave a bottoming tail. I mean, being that it's at triple bottom support and has put in, double its average trading range. And then this thing went much, 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 much higher. But all that matters to the person who took this is they got 2R. They're not thinking about the next time they're going to take it, and the next time, and the next time, and the next time. And now it'll fail 4 out of 5. This is not something you want to make a habit of. You just take a look at the support area, you take a look at the stock, you take a look at the room that it needs, and technically didn't even go 2R. Right? $2.29 on what appeared to be a $1.50 stop loss. It was like 135 by 136.40 or something like that. Okay? People do what they do. You know what? We should be thankful. And I'm being serious. Please don't take this as a joke. Hear me out. It's important. Why should we be thankful, guys, that people do what they do? See, I'm being serious. It's not a joke in any way. Why should we be thankful that people do what they do in the markets, in the stock market? Why should we be thankful? Think about it for a second. Give me an answer. Why should we be thankful? Ding, 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 ding. Trade Slasher and Felix. It's what makes the market the market. That's the exact answer I was looking for. It's what makes the market the market. We don't want everybody agreeing with us. It would make our lives a lot tougher. It's what makes the market the market. So we want people to do certain things, right? I mean, you ask somebody like, hey, that stock's up, I don't know, 79%, and they bought the high. You ever see an all-time high and wonder, who is the person who bought it at the exact penny? I've been there before on Nutrisystem. I'm raising my hand. I did it on Nutrisystem. I risked $100 on Nutrisystem. I literally bought the exact high to the penny, and I lost 10R. I lost $1,000. It's the worst R trade I've ever taken in my life. I lost 10R because I didn't. I think I've told you guys the story. It's the only time I didn't take a stop loss. Now I take them religiously. You guys see it. Religiously. It took one mistake like that for me to get my you-know-what together. But we should be happy that people do these things because it gives us opportunity. All right, now let's go for another one. LVS, Las Vegas Sands. This was 2 days ago, all right? We have a gap down on the daily chart under a green bar, and it's a very nice gap in my opinion. I mean, this is a quality gap, all right? Gapping down under a big green bar. So nice shock value. You're well under the flat 200 period moving average. You're under the 50 period moving average, and you have room to go. But how much room do we have? Well, the green line suggests 34.75 to 35.25 is the range of support, right? That's kind of the range we're looking at. It's not an exact penny, right? Okay. So LVS has a beautiful gap down. I mean, it's really, really is a nice gap. It is. Okay. But we're getting close to support at 34.75, 35.25. So we go over to the 1 minute chart on LVS. And that 1 minute entry, if you look at this, okay, is, I don't know, 36.25 perhaps, 36.30, something like that, right? And that's quite a good entry. Right around 9:40 in the morning, I really like that entry. That's a good entry, okay? Then the stock drops, bounces a little, continues to drop, goes sideways, continues to drop, and then right around 34.80. right around 10 a.m. to 10:15, this thing consolidates at 34.80 for about 15 minutes. Okay, it just goes dead sideways. The entry would be 34.80 and the stop loss would be 35.25. Wow. This was a trade somebody commented about in the room. Like I said, these things happen every day. Every day people look at these things. Every day. And 34.80 by 35.25, again, there's nothing wrong with the pattern. The size of the stop loss at 45 cents is reasonable. But what's it take for this stock to get down to 34.80? Well, it took a $2.20 move, $2.50 move. If you look at this stock, that's a full day's range, $2.50. Right? I mean, that's at least 100% of its average trading range. At least. Okay? Maybe more. I don't know. And it's happening right at support. But what happens? What happens? It keeps on going. It says, here, hold my beer. I'm going to go lower. And it goes about $1 lower, give or take $1 lower, right? Okay? That's over 2R. I think it was about a 90-cent target, something like that. I think it was 33.90 was the target, something like that, okay? This is a tough play. I mean, you have a stock that has absolutely exceeded its average trading range. Take a look at the right-hand side of the chart there, okay? You're down this much at the green line. And you want it to go more. And it's not just you're down this much at the green line, okay? You're down this much at the green line sitting on triple bottom support. Whoa. And it doesn't faze some traders. Nah, so what, Jared? I don't care. Well, here's the big question that I was ultimately leading up to. I got to it a little before I wanted to get to it. Why do you even look at charts? If you're not going to respect support and average trading range, why do you even look at charts? Why do you even have a chart on your screen? What's the point? If support doesn't matter, and in this case, triple bottom support, okay? The stock has literally bounced the last 1, 2, 3, 4 times it's come into this area. Why are you even looking at charts? What's the purpose? There is none. There's really no purpose. Daily, 60, 15, there's no reason to do it. Okay? Is LVS an ADR? I don't think LVS is an ADR. It may be, but I don't think it is. Las Vegas Sands. But either way, it's not the point. It may be, it may not be. ADR or not. Triple bottom support. And you didn't get there on a fresh move. You got there at 150% of your average trading range. But it worked. But it worked. Okay? Now, this is from today. I just happened to randomly come across this today. It's like, oh, let me check that out. We have a stock that is up 1, 2, 3, 4 days in a row. Right? 4 days ago, 5 days ago, this stock was $117. It's now $142. Wow, it's a big move. First 5-minute bar of the day. This stock goes from 137 to 141. It's a $4 move. Well, if I look, the average trading range of this stock is about $5. Right? About. Give or take. I'm just eyeballing it up. Lately, it's been more than that. Some days it definitely does $10 and $15. There's no question. So, this stock is on its 4th day up. The first bar of the day is $4. It gives you 2 beautiful little resting bars. I mean, it is quite a nice little 4-bar play on the 5-minute. But Look it to the left on the daily. I see pivots here at 141. I see a pivot here at 144, 145, and another topping tail here at 144, 145 on the daily. This is the pink line I'm drawing. And you're 4 days up into it. And by the time you get into that, you're about $5 or $6 up, meaning you've met your entire average day's range on the fourth day up. And this stock is 141 by 139.40. It's $1.60 stop loss, which means you need $3.20 for target. You need 144.20. Fourth day up, exceeded its trading range. Now, it's not something that I think I would take. While I do like the 5-minute 4-bar play, there's just not much left in it. It is 4 days up. Okay? It's challenging. Now, obviously, and we go back to this before, expectation could play a factor here. Maybe you're trying to get a half R from it. Maybe you're trying to get an R. I don't know what your expectation is. But if it's 2R, it's not a trade I would take. I will repeat this, and I say it all the time. Why this stock? There are 3,000 or 4,000 stocks you can choose from. Why do you have to trade this one? Just because it has a 5-minute 4-bar play? Yeah, that's what people do. They vacuum trade. They forget the daily. I mean, the PTS book says 3 days up, think sell. 4 days up, really think sell. 5 days up, really think sell. And you're thinking buy. Hey, I'm on my 4th day up where the book says really think sell, and you're going really think buy. It's exceeded its average trading range, and it's 4 days up. Really think buy. It's 5 days up, exceeded its average trading range, has a big old topping tail. Really think buy. That's the way you guys treat this stuff. True or false? It is. Every one of these ideas I got from the room. I didn't come up with any one of these. Every one of these came from the chat room. Every one of them. All 4 of these examples. What are we doing? So then you got to ask yourself, why not just make life easier on yourself? Why not just make it easier on yourself? Take a real pattern with real void that's not extended. Why not just do that? Why not just do that? I'm going to repeat it one more time. Why not just do that? Hey, Kobe, when you're triple teamed, pass the ball. When it's one-on-one, shoot the ball. Why not just do that? Because I might make it. Yeah, 12% of the time. Make trading easier on yourselves instead of making it purposely harder on yourself. Just take the easy money, the textbook pattern that has void to go lower, has relative weakness to the market, matches the time frames, does everything it's supposed to do. I know, it's like one of those like aha moments, but unfortunately it's not for enough people, right? There's too many people that are going, yeah, you're right, that makes a lot of sense. And then they're not going to do it. It doesn't make any sense. And I'm talking about traders not on tilt here. I don't believe any one of those ideas was a trader struggling that day. In fact, I think on those days the traders were doing okay. Don't manufacture something. Don't manufacture something. The idea is to have a proper process. The outcome will take care of itself. Right? Like we talked about in blackjack, you have rules and you have odds, and you follow those rules and the odds work out the way they work out. In trading, the same thing happens. But if you're going to be random every day, it's even hard to make adjustments because you're random all the time. Right? So think about this for a second. If you're truly a random trader, you just kind of do what you feel like, how do you know that Tuesday's really a bad day? You can't even say like, well, I'm not going to trade Tuesdays. Well, why? It might be a great day. It's just the problem is you don't have any process. You just randomly throw stuff at the wall. Like, meaning it's the analogy there is it's hard to make meaningful adjustments if there's not a meaningful, specific approach to your trading. And that goes back to treating it like a business, right? That goes back to treating it like a business. Okay? Take the easy money. All right? Take the easy money. Don't make this business harder than it is. And it's already hard enough. I think we know this. It's hard. It's really hard. And for some reason, we're just gluttons for punishment. We draw a line. Our trading plan says this is it. And we like to step over that line as much as possible. I don't know why. We're just strange as human beings. We do it all the time. It's kind of like your parents tell you, you can have anything you want in the refrigerator, but don't drink the chocolate milk. You come home and it's half gone. I don't know. It's just what we do. The point, though, is until we can control and master what we do, we're never going to be great at this. Okay? And it's the traders that recognize that perhaps their process is random that at least have a step up on the ones that are making excuses for the randomness. And that's where you don't want to be. You don't want to be making excuses for randomness. You want to put a plan together on paper. And that plan may not be great, but it's a plan. And you're going to go work that plan for a week or a month or two, and you're going to go back and you go, okay, what could be better? Even if your results are good, you're still going to look at it and go, where is there room for improvement? Your job is to always be improving, all of the time. The market is, look at Unmul. He made a meaningful adjustment over the last 3 months. He has focused a lot more on option scalps. And now he's batting 90% and he's pulling out his $2,000 a day. You guys saw him a few months ago. He was struggling with stocks, and he still is a little bit. But options are making up. You know why? Because great traders find a way to make money. That's your job. Your goal is to come into your desk and your chair and to make money. That's the ultimate goal. Some days it's easier, some days it's harder. But at the end of the month, you got to look at that P&L and go, it's green. If not, what are you doing? Right? I don't think anyone starts a business to purposely lose money. So you shouldn't either in trading. But to do that in trading, it takes a lot of introspection, a lot of objectivity, an accountability partner, consequence system, an ironclad trading plan. Are you doing those things? I don't know. Anyway, I hope that you guys learned a little bit about process-oriented trading, not gambling, and asking yourselves, is this really the best trade I can take right now? And if it's not, maybe passing up on it. And I hope all those things will help make you a better trader. I'm Jared Wesley of Live Traders. We'll get back at it again next week.